And I think that's where I was going to come to is that right now, and I'm sure you're hearing this too, Larry, is that, well, why on earth would I ever invest in international emerging market stocks? There's so much bad news over there, or they're down, they lost a lot of money. And I think that's the best opportunity to buy. But us individuals are emotional creatures, and we continue to do the same mistakes because of the headline noise, I believe.
You're absolutely right, and let's help them by giving them a good example. Unfortunately, most, if not the 99% of individuals are subject to recency. They remember, exactly the opposite of the way us old folks remember. I can't remember what I had for breakfast, but I could tell you what happened 30 years ago, right? As we get older, our memories work that way, and investors would be best served if they acted that way, remembering their history and forgetting what happened in the last few weeks, months, or even years. So what they end up doing is watching what did well in the recent past and then buying high when expected returns are low, and they watch what did poorly and sell after the prices are now down and valuations are low and expected returns are high. So how does that translate? Well, over the very long term, U.S. and international stocks have pretty much same returns, and emerging markets have higher returns. But in the last 8 years, the U.S. has far outperformed. And investors think 8 years is like infinity, when you and I know 8 years doesn't mean anything. And they ought to know that too, because as a good example, from 2000 to 2009, the S&P returned minus 1% a year, or lost roughly 9% over the period. But that didn't mean you should abandon stocks. But the last 8 years, international has underperformed, so they want to abandon it. So let me throw this question out, and you obviously are a highly knowledgeable investor. For the 5-year period that preceded this most recent period, so 2003 through 2007, the S&P 500 did very well, much better than historical averages. It returned something like 84%. How much did the DFA Emerging Market Value Fund return in that same 5-year period?
Well, I know over the 10-year period, it was well over 200%. I don't know over that 5-year period.
Take a guess.
Well, Bobby, what do you got? You got nothing.
Can't go to that computer now, Bobby.
I can't cheat.
Yeah. I'm going to say if the U.S.